Good Tuesday morning, Market Chameleons and everyone joining us first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, Mitri Parkamonic. How you doing, D?
Good morning, Will. How are you?
Good. You want to start with disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I and Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor, call your broker. That's what they're there for, to help you with advice, giving you guidance. There's the disclaimer.
Excellent.
And I'm going to share my screen. If anyone's joined us for the first time, Will and I, we do these shows in the morning to try to help answer questions you may have about the Market Chameleon tools, the data, or the analytics. If you have a question, you could type it into the live chat on YouTube. Will's watching and he'll read it back to me. If you want to come on a show and ask your question live, we do provide a link to Zoom. Click on that link. Once you log into Zoom, there's a button, raise your hand. Click on that. Then once we let you in, you could ask your question live and direct. While we're waiting for more people to join us and to give you guys a chance to type in those questions, we'll start out taking a look at the pre-market report, see if we could get some insights on what's trading in the pre-market hours, and then we'll move on to the questions. Okay, so pre-market report, these are stocks trading in the pre-market hours. I'm going to scroll down here, and we have a list of our most active stocks, our biggest percentage gainers, biggest percentage decliners. Down here, I see 39 stocks made our percentage gainers list. 22 are on our decliners list. So from this perspective, looks like we're trading a little bit with a bullish bias at the open. Let's look at it from another perspective. We're going to go to this calendar view, and this is a summary of what's going on in the pre-market hours from a high level. So we have 360 stocks so far trading in the pre-market hours higher than the previous day's close, 208 stocks trading lower. As far as volume, 98.1 million shares trading on up volume versus 67 million on down volume. And if we convert that volume to dollar value, we got almost $800 million worth of stock trading on up versus $712 million trading, $712 million worth of stock trading lower. So here also slight points to a slightly more bullish bias or sentiment in the pre-market hours. Let's look at it from one more perspective. I'm going to come down here and come back down to the list of stocks, and we could see that this list of stocks has small cap stocks and their ETFs, leverage products. Any stock that's listed on a major US exchange, if it's trading in pre-market hours and meets the thresholds that we set for volume, liquidity, price change, it could make this list. And to narrow down to a small group of stocks, we could use the filters above. So if you do have a watch list, you could filter by your watch list. We're going to use this filter here in ETF. I'm going to click on it. It's a drop-down menu to choose from. Let's select SPY. When we do that, the list below will get filtered by stocks that are holdings in the SPY ETF, which are the S&P 500 constituents. Here we see 4 stocks made our percentage gainers list, 3 on the decliners. So from this perspective, I would say right now it's a mixed bag. Nothing's sticking out that much. And of course, we got the Fed meeting coming up. That's something to watch. That's tomorrow, correct, Will?
I think it's tomorrow.
2:00. So I think we gave it, enough time, a couple minutes into it. Well, if you have questions, I'll take them now.
Nothing's popped up in the chat.
Okay. There was a question left over yesterday. I'm trying to recall it from memory, but I think it had to do with if if we have somewhere where it shows the implied moves based on options going forward, like weekly or monthly or something like along those lines, if I recall. So under, I'm going to use SPY here. I went to the SPY stock, and under the options, we have a report here, activity. When you click on it, it gives you a summary of the options based on the different option expirations available, right? So in SPY, you can see there are a lot of different option expirations. And next to it here, we see how many days are left to maturity. These are trading days, okay? So it's based on, over here, the number of trading days left until expiration. And from the options, we could go and derive the implied move from the option strat. All right, so if we go into the options and we create a synthetic option straddle, why would we create a synthetic? Well, if we go to the options chain, right, we're not going to find an option exactly 440. We're not going to find a strike exactly where the stock price is at every penny it trades, right? Because strikes are, you know, in SPY they have dollar strikes. I think they even have half-dollar strikes. Maybe some stocks have $5 strikes. So you're not going to exactly find it to the penny. Okay, here maybe they're $0.50. Let me see in the options chain. So, you know, we got dollar, right? But as we go out further, maybe it expands. Well, we've got dollar ones here. So I think as you go out further, I think there are less strikes. You know, SPY might be a special situation since it's so heavily traded. But the point is that it's not right to the penny, right? So straddle is really like right to the penny. So we have to create a synthetic straddle based on the surrounding data. So then when we do that, we'll say, okay, based on the surrounding data, we do a weighted average of the implied vols. Then we could interpret, well, this straddle, what is the implied move based on the straddle? Okay, why do we use the straddle? Well, if the buyer of the straddle, right, somebody buys a straddle, if it moves more, the percentage move in the stock goes beyond what the cost of the straddle is. So you're buying a call, you're buying a put. If the stock moves by big enough percentage that it covers the cost of the straddle, and then beyond that, the buyer becomes profitable. On the flip side, for the seller of the straddle, the percentage move has to be below that, right? So where's the break even? Well, the break even is exactly where the straddle is, right? That's the implied move, where if the buyer and seller exactly break even, that's the implied move, right? Because that's where the meetings of the minds is. That's where the right now where buyers and sellers are transacting. So what is the implied move? Well, if we go for particular expiration here, right, we could go over here and interpolate, well, here's where the at the money straddle is priced, right? So remember, we're creating a synthetic. It's not always exactly at the strike price. So we'd have to interpolate what that straddle would be. And then we have the dollar value and then the percentage move in the stock required in either direction, up or down, to cover the cost of that straddle. That's where the buyer and seller break even, right? That's where the market breaks even, and the market was buyers and sellers were right on the nose. Okay, so that's the implied move, right? We don't know what the actual move could be much more or much less. That's where the markets are implying. All right, so as far as like you know, days to expiration, these are trading days. So we use trading days because these are the amount of days left where the stock could trade and move. So, the holidays, weekends, there's no trading. Stock's not moving. So these are actual trading days over here. And you could go down the line and, see what the straddles are implying based on that expiration. Hopefully that answers the question. Well, again, I'm doing it from memory, and sometimes the questions are general.
Yeah, it was a pretty general question. I think you got to it. That was from, I think, Hoot yesterday asked that question. We also, I think yesterday there was Jackie had a question. He was the one who asked about leaps.
Yeah.
He was saying, is there a way to search if IV is less than historical IV? I'm assuming he was asking about the 2025 January expiration. I don't know if that's available, but that was a question that was hanging from yesterday from Jackie.
Right. So let me see if I can do that. Let me see if I could find so this screener here, okay, options by expiration. It's a screen kind of created for that type of question. If I'm looking for screening out a particular expiration, it could be short term, intermediate term, it could be long term, right? And one of the things we want to look in the question is, well, where's the implied volatility in that expiration? Because we're looking at that specific expiration. And as a benchmark, is it high or low? Right? That's kind of what we're looking for. That's the question. So let me see if I have. So you can pick over here a particular expiration, let's say December 25th. And what it will do is go back and find the stocks that have a December 25th expiration available. So this is 569 days out. Okay, so we could see here, there's quite a bit. And there's 161 stocks so far that we found. So then the question is, okay, here's that money IV, right? This is what it changed. And is this higher or lower than the historical vol, right? So we're looking at probably here, historical vol. We're probably looking at what the 20-day or 1 year vol, right? So here we have this is the 20-day volatility that the stock's been moving at. This is the 1 year, and then we could compare that to the at the money IV. So let's first look at. Let's filter this down a little bit more, and maybe look for higher market cap stocks. Let me just filter this down a little bit, and let's look at option volume. I don't know. I think this is based on the expiration itself. Let me do 1,000. All right, so this here is filtering out higher cap stocks, and where the option volume is more than 1,000 for this is yesterday's close. We're not open yet. Yesterday's close, that over 1,000 contracts traded in that expiration. All right, so at least there's some trading going on yesterday. So we see here some bigger known names like Tesla, NVIDIA, Meta, SPY. And then when we have the implied volatility at the money IV in that expiration. And the question, I think, was, is the at the money IV what trading below or above, something like that, the historical vol?
Yes.
Okay. So we have two historical volatility metrics here. This is the actual realized volatility of the stock. So now we're comparing the forward implied volatility, right? The implied volatility is the forward-looking volatility set by the options. And we're comparing it to the historical realized volatility of the stock. So in this case, here we have JP Morgan's December 19th. The implied volatility is 24.4. We see in the last 20 days, realized volatility is 26.5. And we also see that in the last year, JP Morgan's realized volatility is 23.2 in the last 252 days. So here, what is a quick way to see how much it's over or under? Because we want to compare that, in the screener. So if we compare the at the money versus the 20-day realized, so if we compare the 20 at the money 24.4 versus the 20-day realized, we see that's trading at a 48% premium, right? It's trading 48% above the 20-day. It's much closer to the 1 year, see 24.4, 20, so it's trading slightly over by 5.2%, right? So 24.4 minus 23.2 divided by 23.2, up 5%, right? 5% above the 1 year realized, right? So slightly trending above. We could sort these, see if anything's below. So over here, Tesla, right? The Tesla, December 19th expiration, right? December 19th expiration of 2025. The at the money IV is 51.3. And if we just looked at the last 20 days, well, last 20 days, it's 58.4. In the 1 year realized vol, 62. So we can see, just these two numbers alone also kind of just indicates where the recent trend is. So right now we're trending below the 1 year, almost across the board. Even like you could see, almost all of them, the realized volatility is trending below the 1 year, right? 20-day is trading below the 252. So we're trending lower. But how does this implied volatility going out to December 19th compared to the 20-day? Well, it's trading 12% below that. And how does it compare to the 1 year? It's trading 17% below the 1 year. Okay, so again, this is one way to look at a leap, right? Look at a leap and select it and then compare the at the money IV to historical. If you wanted to, just do 60 days or more, you could do that. I maybe could probably add like 200 days or whatever, but this is a leap. So if you wanted to go out further, maybe, let's see I'm in here in 2026. So here's 2026, right? But let me just see the summary. So this is 588 trading days to expiration. How's that historical vol look? So here we could see if we compare that to the 1 year, right? Comparing these comparing the at the money IV to the 1 year, you could see that a bunch of them are trading below. I don't remember if the question was to see if it's trading below or above, but
it was less than.
Okay,
IV was less than historical IV was
right.
The question.
So here's the quick kind of screener way to do it. So if we went to Tesla, we could see how those options look. So here's Tesla options over here. You could see yesterday, this is the options chain. These are the different expirations. And here are the at the money IVs for each expiration. This is the change on a day. And you could see Tesla has option volume almost every expiration. I mean, some of them are light, but we still see some volume. So even in this one, January 16th, 3,000 contracts traded. If we click on it, we could even see how the volume's distributed. So it's not one trade. You can see lots of smaller trades on different strikes. All right. So we got lots of different strikes trading here. So there is trading going on in Tesla in these leaves, 851 calendar days, 587 trading days. So upside calls, people are trading, up 92% away from the strike. So yeah, it's interesting that much trading is actually going on in Tesla might be, a special situation because it's the busiest stock out there. All right, the busiest single equity stock as far as options trading goes. But that's the quick way to screen out leaps and compare the at the money IVs versus the historical volatility.
All right. Perfect, D.
Yep.
We've only got about 8 minutes. There are no other questions I see have popped up yet. Any final thoughts for the chameleons?
Yeah, no, everybody, thanks for joining. Stay safe out there. Hope to see you guys tomorrow. If there are no questions, probably we'll just stop it here.
All right, great. Everyone have a safe trading day. Awesome job, D. We'll see you tomorrow on Wednesday. Bye-bye.
Yep.